You guys see this face? This is the face of somebody that just made 7% trading SQQQ. If you guys didn't know, all you guys on my Patreon know, and I think I mentioned it this morning on YouTube as well, I bought SQQQ as a hedge at $41 and roughly 50 cents. That was this morning in the pre-market, and I just sold it at about $44.50 roughly for, again, a 7% gain during the press conference and the Q&A, which, by the way, that's what we're breaking down in this video. The Fed press conference, Jerome Powell. We're going to talk about rates, tapering, the balance sheet, and of course how the stock market's reacting. So hit the like button, subscribe, join my Patreon if you want all my real-time moves. That's linked down below. And you guys could also get 5 stocks for Moomoo. Use my link down below, deposit $100, and you can get up to 5 stocks, each valued up to $3,500. That's for Moomoo again. Link down below. And with that being said, let's talk. So at this point in time, the markets are heavy in the red. The Dow's down 0.7, the Russell's down almost 2%. We have the S&P down 0.4, and we have the Nasdaq down. Let's see here. What's the Nasdaq? Actually, the Nasdaq is going green. The Nasdaq's now up about 0.03%. But let me tell you, earlier in the day, the Nasdaq was up over 3%. You heard that right, 3%, meaning we are swinging like no other. The markets are going up, the markets are coming down. This is insane. So we have to break it down. Let's take a look at QQQ. You guys can see we hit 356. We went all the way to 340, which is a drop of 4.5% during the press conference here. And now we're seeing a bit of a relief rally, as you all can see on the intraday chart. And I'm not too sure if this is going to last. We shall see. And when it comes to SPY, let's take a look. SPY is also seeing a relief rally. And from top to bottom during the press conference, this dropped over 3%. So at this point, we kind of knew what they're doing with rates and tapering, and as of now, they're keeping the rate, the Fed funds rate, at 0% roughly, right around 0%, and they're looking to hike the rates soon, quote unquote soon, and we're probably going to see that in March, right? And he got asked, Jerome Powell, would the Fed consider a hike every meeting or every other? So they were kind of, pry out of him the path here to raising the rates. Is it going to be every meeting or every other meeting, maybe every other meeting? And he, of course, said, we haven't made any decisions about the path. We're going to will be nimble, rather. And they're going to use the Fed in general incoming data, rather, for their decisions, right? Nice answer there for Mr. Powell. Cheers to that, Mr. Powell. Let me get some coffee, guys. Hold up. And when it comes to tapering, they're still sticking to bringing it to an end in early March, which we already knew that. So we kind of already knew that with rates and tapering. And he got asked about the balance sheet. I think this was maybe it was the third or fourth question, more towards the beginning of the Q&A. He got asked about the balance sheet. He dodged the question initially. He said, at the appropriate time, we'll provide additional information. That's what he said. And then he started talking about how the balance sheet is a lot bigger these days. It blew up over the past couple of years. We all know that. And they're looking to move sooner and perhaps even faster to shrink the balance sheet, right? I'm assuming. And they won't have, they want it, or what am I trying to say here, guys? Hold on. They want to have it, there we go, decline by a predictable measure by adjusting reinvestments primarily. So they're not trying to have the balance sheet crash, right, or get any bigger, but it's probably going to get bigger. I mean, I don't know. But, that's kind of what he was talking about when it comes to the balance sheet. And we all know the balance sheet is freaking massive right now. And the risk here that Powell's in and the Fed's that Powell's seeing, and with the Fed in general, is if they raise the rates aggressively, that's going to screw them in terms of the balance sheet. That's probably going to cause a recession. It's going to be tough times, most likely, economically speaking, if they just shoot rates up to, let's say, 3% overnight or to 2%. So that's why they're doing these little itty-bitty teeny, rate hikes. But on the flip side, if they go back to zero, well, we're already at zero, but if we didn't hike rates, the problem there would be inflation would run rampant. Sure, stocks would go up assets will go up, but inflation is going to eat away our purchasing power, and the lower income earners, even middle class Americans, they're going to struggle. So in my opinion, I think rates got to go up, even if it causes a drop in the stock market. And when he got asked about the stock market, I think somebody asked him, how does the recent stock market activity, how do you see it? He ended up saying he doesn't focus, and the Fed in general, they don't focus on just one market to make their decisions for their dual mandate. They got to look at a bunch of different things. So I guess that makes sense. All right, they're not just going to, but in reality, come on, they do look at the stock market. Come on. I mean, the stock market is literally the biggest part of the average American's wealth, that and their home. Stocks are huge. I mean, 401ks, Roth IRAs, pension funds, retirement plans. This is all stock markets. So if the stock market drops 20, 30, 40%, are you telling me he's not looking at that as a tool, or he's not looking at that even though it's just one market? I mean, come on, he's looking at it. But he gave a, I guess, politically correct answer there, right? And when it came to the supply chain, and this is when I think the markets really started slipping, he started talking about the supply chain. He got asked about it, and he said he doesn't expect the supply chain issue to be resolved by the end of the year. And he said it could go into 2023, especially with the semiconductor problem that we're seeing. That will persist, based on what he said, into 2023. Who knows? Maybe even longer than that. We don't really know at this point. So markets are slipping aggressively on this, guys. And I'm not even going to say I'm surprised. I'm not surprised. I'm not surprised. I'm really not surprised at all, to be honest with you all. I'm not going to say I'm surprised at all. So that's what we're seeing. We're getting that dump. SPY's down from 444, where it was looking pretty bullish. Now it's down to 432. The VIX is pretty much, it's flat. It's up a little bit, but still pretty much flat. And the stocks that we saw earlier in my previous video, a lot of stocks were green. There's still some green, but a lot of them are going in the red. Some green ones remaining are DraftKings, GameStop, Tattooed Chef. We have Applied Materials, Nvidia. Google's still green. Pretty nice day for Google, even though the Nasdaq's going underwater right now. Google's up 1.5%. We have Intel up 1%. They report after hours. We'll cover that in my next video. And we have JP Morgan up 0.3%. Other than that, we're getting crushed right now in the markets. And not to toot my own horn, but that's why you got to look at things like SQQQ. If you're more of an intermediate advanced trader, you have a couple years experience at least, and you understand how this works, go trade SQQQ. Maybe, what's the other one? SPXS. These go up when the markets go down. This is a great way to hedge your trading account, your portfolio. But if you're a beginner, or even if you're, let's say you're not even a trader, I wouldn't even touch this. If you're just a long-term buy and hold investor, don't even worry about this, in my opinion. But if you want to, maybe trade it, you're a trader, you're more intermediate advanced, you want to make some money in volatility, these are great. SPXS goes up whenever the S&P 500 goes down. So let's say the S&P goes down 1%. This will go up 3%. And it's the same thing with SQQQ, but the only difference is SQQQ tracks the NASDAQ 100. So NASDAQ 100 is more volatile. It goes up, it goes down a lot more. That's why I personally picked SQQQ for today, and I made about 7% on it. So that's it, guys. Hope you all enjoyed this video. We're about 9 minutes in. That's it. I mean, look, it's gonna get real. Bonds, the tapering, it's going down. We're not seeing QE anymore. Interest rates are coming up. We're getting ready for it, and we've been getting ready for it. At least me personally, I've known this has been coming for a while. So what do you guys think? Make sure to let me know in the comments. Hit the like button, subscribe, join my Patreon if you want all my real-time buy, sells, and call-outs, morning update videos, Discord access. That's on Patreon, link down below. And you guys could also get your 5 stocks from Moomoo. Free money, guys. Use my link. Deposit $100. And we each get some stocks. I think they're at $3,500, up to $3,500. So get your free money from Moomoo. That's linked down below. Same with the Patreon. I'll catch you guys in the next video. Thanks for watching. As always, keep crushing the markets. Stay safe out there. Peace out, guys.